Hey guys, I want to go over today's Silver Bullet session, the PM session from 2 to 3 p.m. Eastern Time. Alright, so let me turn this off and let's put the markings on here. Okay, so let's start off just with this. The dark gray lines is the 2 to 3 p.m. session window. That's the Silver Bullet hour. I have an indicator that I made that does that for me. So I want to go over my model. Okay, I need a higher time frame liquidity needs to be taken. Then I need a swing high or swing low broken. That would be the market structure shift. I need displacement that formed a fair value gap or a PD array entry, like a mitigation block, a breaker block, order block, something like that. And then my entry parameters are I need to risk 1 for 2, which is risk to reward ratio, and minimum of 5 handles. Okay. So when we start the 2 o'clock hour, we have this swing low here, this sell side draw of liquidity right here. And then this is the high of the day so far. So the entire day, this is the high. So obviously it's already taking higher time frame liquidity as it's coming up already. So now we're looking for a shift in market structure because the first one already objective is already met by this, taking out all these swing highs throughout the day. Okay. So now we have a short-term low right here. We have a swing low here. We have a swing low here. Price comes up and then it comes down. You have displacement. Okay. So right here you have your fair value gap right here. Displacement that formed a fair value gap. Right here we have higher time frame. We have our, I don't have it on here. Here's our market structure shift right here to the downside. So you have your fair value gap. Where would be your entry? You could take your entry right here. You could take your entry. I'll show you why I have it right there as well. So you have your mitigation block here as well. So mitigation block, a lot of people can't spot them very well. The only difference between a mitigation block and a breaker block, they all are either the swing high or the swing low that either takes out the previous swing high or low or fails to take it out. Okay, so a breaker block, if this was a breaker block, this would be the swing low. This would be a bearish breaker block. It would take out this swing high. Okay, but a mitigation block is the same swing low, but it fails to take this out. See how it stops here? It doesn't take this out, so it fails. And then from then on, it's the same as a breaker block. Once it trades through it, past the swing low, trades through it and comes back up, that's a trade worth taking right there. That's the mitigation block and aggressive move down. So this orange right here is the mitigation block. This green right here is the fair value gap. Anywhere in here you could take your trade. I have it listed right here at the mitigation block. It's a stronger PD array in my opinion. So I put it up here. You got to risk minimum of 5, which would have been just to take out this swing low here. Ideally you want to come down to here, which would have been the 10 like ICT teaches, and you would have got that right here, right at the 11 o'clock hour. Okay, so there's one entry. That would have been your Silver Bullet setup, their first one. Pretty clear. Actually, it's really clear. A great trade. If you were targeting this low, though, you see how ICT always, not always, but a lot of times he takes additional entrants. He adds to his position. Okay, so where would you do that? Well, here's another fair value gap right here that took out this swing low right here. Come back up, there's another one. So you could have added a position right there. That too would have given you 5 handles right there. Still not here. You could have gone down to 7 handles. I don't think you would have got 10, but you could have aimed for, let me go up. You could have aimed for this swing low down here, and you could have got your 10, but you didn't need to. You still got your 5 there. So you still got, still got 5 handles there. We're still aiming for this. That's our drawn liquidity. It's coming down there. So where was your next one? Well, Here's another fair value gap here. Price came up, comes down. There's a fair value gap. Would you have taken this entry? It feels a little bit like chasing price to me. You could have put a spot on here. Yes, it does give you 5 handles. But here's why this is not a great trade, in my opinion. I wouldn't have taken it. That's where I would have stopped. I would have taken this trade, and here's why. You take it from the swing high to my target right here. This red line is equilibrium, okay? So up here, you're in a premium to go down to a discount. It's still a good trade. Here you're in discount. I stop. ICT teaches us that if you're in a premium, it's best time to sell short. Higher the better. Right here, you're really close to equilibrium, so you could add your position because you still are targeting this. You're still good. That's as far as I would go. If you see when he adds to his position, he does not go beyond 50%. He would not take this trade. Now, does it work? Yes. Just because the trade works out in your favor doesn't mean it was a good trade. It could have been a riskier trade. To me, this is a riskier trade because it doesn't take out anything. This takes out liquidity here and comes up, but it doesn't take out a swing high. You would be going the opposite direction. It's just you're chasing price at this point. There's just not a great trade. I'm just showing you that if you missed this and you took this trade, you'd have got it, but you would have been lucky, in my opinion. It was not a perfectly good executed trade. Okay, so there is the 2 to 3 p.m. silver bullet for May 17th.